Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading, pretty much the top steps on how to do it full time, how to make $100 or $200 per day swing trading full time. So I hope you guys all enjoy this. If you guys have any questions, by all means, ask down in the comments. And if you guys want to learn more about investing and trading in the stock markets, guys, I've been a full-time swing trader for 6 years, and we have an amazing school where we have a group chat, private live streams, we have quizzes, lectures on pretty much how I find stock and my strategies and my mindset and all that stuff. So I hope you guys all enjoy it. We're offering 50% off with the code HALFOFF. So check it out down below. I'll put it all down below. At least check it out. But guys, let's jump into this. So with swing trading, a very, very common question I get asked is, Carter, I want to make this my full-time gig. I want to do this. I don't know the proper steps to get started. So in the video, we're going to be breaking down some tips and tricks. And then at the end, we're also going to break down some of my strategies behind swing trading. So stay tuned for that. But let's just kind of jump into step number one. If I was just getting started with swing trading, what would be the first step I would take? Would it be opening up a Robinhood account and start trading, or what would you choose? So for me, when I first started, I went at it the completely wrong approach. I did not paper trade. I opened up a Robinhood account. I funded it with about $1,500, and obviously I lost it. It took a couple of weeks, but over time with trading, yeah, you may get lucky a couple of times and make some money, but to do it consistently, you need an edge. You need a strategy, and that's what I didn't understand. So what I would recommend doing for step one is to pretty much educate yourself. What this means is it's going on YouTube. You guys are already taking your first step right now, watching a video like this. In doing this, what you're going to kind of fall in love with is certain strategies. Maybe you might like day trading better. Maybe you might like swing trading better, or whatever works well for you. Take that first step and just kind of look at a variety of different options. And that's the approach I would take. Now, the next thing I would do if I chose, okay, swing trading is what I want to do, then I would open up a Moo account. Okay, I'll put them down below. They're absolutely fantastic. But what they offer is great charting, great scanning, and they offer paper trading. Paper trading is using simulated money to practice. That's all it is, to practice your entries, your exits, and your risk management skills. That's it. It doesn't practice with your emotions. We'll handle that later. But what you want to do is get a general feel of the broker you choose. So for me, I've used Moo for 6 years. I absolutely love them. But there's a learning curve. Learning the charting, learning the trend lines, learning the scanning, all that stuff take time. And you just need to jump into it and kind of just start messing around with that. Now, during this time, what I would start doing is to learn from as many people as you can. And I'm not saying to join a community, because I would recommend it just because it does cut down on that learning curve. But what you want to do is just honestly start the process. You want to start the process of working on your strategies, working on what type of trader you are. Maybe you only trade blue chip stocks. Maybe you trade trend lines, or maybe you're a short trader. So doing this, you're going to do this for at least 6 months to a year. And I know that sounds like a long time. I completely understand, but you have to have the approach of like a job or school or something along those lines, like a doctor or an engineer or something along those lines. Because if you go at it with, well, this is going to be like my side hustle, then you're going to treat it like a side hustle, and it always will be a side hustle a year or two later. But if you dive in and you say, this is my career, this is what I want to do, and I'm going to devote time to it, it's going to take time, just with anything. It takes time to be successful. That's where you grind. That's where you work. So 6 months to a year to paper trade. During this time, you're going to practice strategy, and you're gonna become profitable. And I know it sounds crazy to become profitable in such a short amount of time, but every trader is different. That's just a general expression. 6 months to a year. Now, after that 6 months to a year period, what I would recommend doing is funding your account. I know this sounds a little crazy because you're funding it a year later, but you're not going to be trading thousands of dollars worth of stock. You're going to be just trading small amounts of money, whether it's $10, whether it's one share. That's what I always recommend, just starting out, just buying one share. And you're going to slowly start introducing cash and capital into your account, because I hate to say it, paper trading is super easy. Super easy. There's no emotions tied to any of the money, and it's a lot easier to be successful with it compared to your own cash. So, slowly start introducing cash and capital for at least 6 months. So now you're looking at about a year and a half. Okay, doing this, you're going to slowly introduce cash and capital, and you're still going to need to be profitable. And you're going to slowly start growing your account. A lot of people love to have this misconception with trading that you need $1 million to be successful. No, if you want to turn $100 into $1 million, it's going to be incredibly difficult. And that's where you see a lot of scammers and scammy people online. But the reality of it is a lot of traders that make money in the markets, they're only making 2, 3, 4% returns. It's nothing crazy. They're trying to do this every single week. That is their goal. And obviously it does seem crazy for a goal to be that high, but that's a goal. A goal should be always something you're pushing yourself to get. It's not, I'm not saying it's easy by any means, but that is your goal. Now, those 2, 3, 4% returns compounded with a small amount of money, that's where you're going to make money. That's where you're going to have your bread and butter come in. So that's my recommendation for just starting out. Now, I do want to show you 2 stocks. The first stock is a stock that I'm holding. The second position is a stock that we are looking at to possibly trade here. So let's pull up stock number 1, the position that we are holding here. So the position that we're holding is on ticker symbol PARR. Now, looking at this stock here, you guys will notice that we have this great upward trend, meaning the stock just goes up in value, right? It's gone from $20 all the way up to about $40 in the matter of about a year, which is good because there's a good amount of buying pressure. Then we also have these moving average lines. Okay, you guys can see the blue, the red, and then this green line. The green line is not a moving average line. It is another indicator. It's what we call a RSI line, also known as the relative strength index. It pretty much tracks momentum, tracking undervalued or overvalued. You try to buy a stock when it's pretty much as low as it can get. That's just a higher tendency of where we'll see a lot more buying pressure involved. And we'll show you guys what I mean by that. Now, the blue and red lines here are what we call moving average lines. So what they act as is trend indicators. So you can look at it, instantly know the direction of the stock. Okay. The second thing it acts as is when the stock is above it, like it is up here, we've seen tendencies of it using as support lines. This is where we'll see other retail traders invest off of. We'll see hedge funds buy it here. So there's often more volume, which will often lead to higher, returns. So let's look back here. So what we've seen here is the stock hit it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, and then 8 times. Each and every time we've seen just natural tendencies of getting buying pressure. So we understood that. We hopped in near and around about this $36.50 area, setting our stop loss just below near and around $35. So we risked $1 to make $2.52. Obviously, not a super great risk and reward, but I was very, very confident with this trade because we had a lot of indicators in our favor. That's always a good sense of direction. So let's look at this. So it came in contact, hopping in here, setting our stop loss here, and then our target is going to be something what we call a resistance line. So you guys can see every time it hits about $39, almost $40, we could say $40, we've just seen a lot of sell-off, right? It hits it once, twice, 3 times, 4 times, and now 5 times. Each and every time we've gotten a lot of sell-off there. So this is going to be our target, about a 9% return. It took about 1, 2, 3, 4, 5, 6, 7, 8 days, so a little over a week to get this return, which is absolutely fantastic. Now, let's talk about a position that we are possibly looking at to trade here. This is the one I do want to talk about here is because it's super, super interesting and super, super cool here. So one of the reasons I like this one is you guys can see it came in contact with the red line, which is the 200-day moving average line. It's going to be a harder support, and this is going to be obviously the best time to buy a position. Is going to be around that 200-day. It's going to be a harder support than the 90, but it's not trading there. So how do you know if there's a tendency of getting buying pressure? So what we know here, as you can see, when the stock is below it, it acts as resistance. When it's above it, it acts as support. So as we look at it here, you guys can see it falls below that 90, hits it, and just establishes resistance. Now, old resistance has a tendency of acting as new support. So now with the stock falling in contact here with that 90, we could actually hop in. I'm not saying we will, but it does look very, very strong if we hopped in here near and around this, 33.89 area, setting our stop loss just below 32, risking $1 to possibly make about $3, which is a decent risk and reward. And obviously we do have some resistance, here. So that's going to be our our first target is going to be here. So it's about a 2-to-1 risk and reward, but I wouldn't be surprised if we do get a squeeze up higher. So this is just a clear example too of looking at this. Now, you also can see I drew out this trend line here, which we've seen tendencies of it getting buying pressure there. So it hits this trend line, getting a lot of buying pressure. So we have the 90-day moving average line support, we have trend line support, and then we have an undervalued point on the RSI. So let's show you guys that so you guys can kind of start implementing that in your strategy here. So looking at it, it's trading for about a 30 on the RSI. So the last time it was trading for a 30 was all the way back in here where we had this great move from $29 to $33. So as we zoom out, you guys will start seeing indications where this stock moves every single time it's undervalued on the RSI, which that's where it's at right now. So this is a very, very easy example of how you guys can start doing this. Now, in order to make $100 or $200 per day, you just got to be consistent with your trades, finding high quality picks. Don't trade every stock you see, and that's always a good first step. So I hope you guys all enjoyed this. If you guys have any questions, by all means ask, and you guys are more than welcome to check out my school where I teach people the strategies like this. So check it out down below. Code HALF OFF to get 50% off, and we'll see you guys later. Take care.